Welcome to online lectures by CA Studies. For more lectures online, please do visit castudies.lk.
At our final part of this chapter, which is lease or buy. So you have to decide whether you are going to lease your vehicle or it is cheaper to buy it. How to decide which one is the cheapest method of purchasing is by comparing your present value of the lease payments with the cost of the asset or cost of the vehicle. So what we will be doing here is present value of lease payments will represent leaser's cost, okay, and the cost or the fair value of the asset, let me write fair value of asset will represent the buying cost. Okay, that's it. Let's go through the example. TT Limited is considering whether to lease an asset. The asset has a life of 10 years. It can be leased for 10 payments of 2000 per annum, payable each year in advance. Implied interest is 10% per annum. Okay. To find the cheapest option, we calculate for leases the present value of the lease payments and for the cost of the asset, the available market price given as per the question. In this case, they have given present lease payments descriptions. So one thing to note in present value, is that this is the lease payments, they are fixed, isn't it? In this question, they are fixed for a fixed number of years. If they are fixed for a fixed number of years, what do we call it? What do we name this? We name this as annuity. Right? But it is paid in advance. Then what's the formula we must use to find the present value? We must use present value of annuity in advance. So present value of annuity in advance. What happens there? How do we calculate that? Year zero's cash flow plus the annuity formula. Annual cash flow multiplied by annuity discount factor at 10%, that is the interest rate they have given in the question, for how many, they have made 10 payments. Now should we take it for 10 years or 9 years? You know, in advance, if something is paid in advance, the payment starts in year 0. That is the first 2000 is paid. Then goes with year 1, year 2. Likewise, when you go till year 9, you will reach your 10th payment. 10 payments you must have made once you reached year 9, because you have made your first payment in year 0. Right? Year 0 means what? Today. I hope you all remember the annuities and perpetuities what we learned. So year 0 means today. So today you are making one payment and then annually at the beginning of every year you make a fixed payment. Now that fixed payment will finish on year 9 and then that will be equal to therefore 9th year over here, not 10th year. Why? Because year 0 is it's starting from today. That's how the advance works. But why? Okay, so here we will be taking annual cash flow is 2000 what we pay as rental, multiply by the annuity factor of 10% at the 9th year is 5.759. However, what do we add here? I have mentioned it is year 0's cash flow. Because annuity factor considers the factors from only year 1 to year 9, not year 0. So, if we are multiplying this our annual payment by the annuity factor, then we will be only considering the payments from year 1 to year 9, not year 0's one. So that's why we have to add it separately here, which is 2000. Why simply 2000? Doesn't year 0 have a discount factor? It has. What it is? Year 0's discount factors are always 1 because there is no time value for money. Because we are getting the lease today and we are settling 2000 rupees today itself. We are not going to settle tomorrow. So the time has not passed. Why the very reason why we calculate present values is because the time, we are trying to bridge the time gap between the payment we make today, the value of the payment we make today versus the value of the payment we make later. To match it only we use this discounting. As you all remember in compounding and discounting chapter, that's how we learned. So, year 0 doesn't have a time gap. Because it doesn't have a time gap, the discount factor or the annuity factor or the perpetuity factor is always 1. If it is 1, it will be 2000 into 1 is 2000. Okay. So, that answer will be therefore 13,518. What is the cost of the asset they have given? So, basically lease cost will be 13,518. Cost of the asset they have given 15,000. Okay. Now, you all tell, what is the cheapest? Lease or purchasing? Which one is cheap? Lease is cheap. Why? Because it is less costly than buying it from the dealer. Yeah. So, your option, your exam answer must be choose the lease option, which is costing 13,580. Alright. So, with that we finish leases and loans chapter. Hope you are familiar with all the theories and got everything right. Practice all of your revision kit questions and let's meet at the next video.
Thank you for watching the video. Stay tuned with castudies.lk for more lectures online.